Hi, everyone. This is Jason Burak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is the CEO of Santiago Capital, and he's worked in the financial industry for a long time for banks and money management firms, but he's become famous in the last couple of years in the financial community for his dollar milkshake theory, which is very controversial, but it's been proven right for the last couple of years, whereas most of the dollar bears and a lot of people that are pro-China, I would say, do not agree with him. So Brent Johnson, and we'll talk about that later in the interview, especially in the gold community. Brent Johnson, thank you for joining me again.
Absolutely, Jason. Always enjoy coming on and speaking with you and your listeners.
Brent, I think you've had a really good track record the last couple of years, but a lot of people don't want to hear what you have to say now.
Yeah, well, first of all, I appreciate you saying that. I don't know that I've necessarily been proved right yet, but I haven't been proved wrong yet. And so I think, when you're in the investment world, you want to make money when you're right, and you want to try not to lose too much money when you're wrong. So, I think the next couple of years are going to be very interesting, to say the least. I think I have a pretty good grasp of what's going on and how to benefit it if I'm right, and I think I have a decent grasp of figuring out when I'm wrong and what to do if that happens. So in any case, I'm actually really excited about the next couple of years. I know there's a lot of people out there who are not, and they're very fearful. And, I think maybe that's a prudent thing to be, is fearful. It's definitely going to be an uncertain time period, but it's a little bit like the Super Bowl. You kind of wait around and you want to get into the big game, and you know what? The big game is here. So I'm kind of excited.
Well, there's a Chinese character that crisis and opportunity are the same character, right? And in the old Warren Buffett saying is be greedy when others are fearful and fearful when others are greedy. So there will be opportunities here, but there's also a lot of risk. Now, I want to get your opinion.
I'm gonna give you one other quote that I think needs to be added on to that, and I think it's been used before, but I guess it got a little bit more publicity in the last couple of years with Game of Thrones, and that is that chaos is a ladder. And when chaos reigns, it gives you an opportunity to step up another rung. And so I think there's going to be a lot of chaos, and I think there's going to be a lot of opportunity to climb the ladder over the next couple of years.
Yeah, it's kind of Machiavellian, and I think Rahm Emanuel also said it, who is Obama's chief of staff and the former mayor of Chicago, and he said, don't let a good crisis go to waste.
Kind of endless, right? Nothing new under the sun, so to speak. But like I said, it's going to be interesting.
So let's get your views on the global macro situation, because there's a lot going on here, and we could spend as much time on this as you want before we talk about your views on the dollar, whether it's the European Union, European banks, China, emerging markets. So let's break it down and talk about your views on the global macro situation right now.
Sure. So for the last couple of years, I've been kind of beating the drum that the whole world is a dollar story. And I still think that is the case. Now, the dollar has not broken out, but it has rallied quite a bit in the last year. 12 to 14 months ago, the dollar was at, the DXY index anyway, was in the high 80s, low 90s. And now it sits at about 97. So over the last 12 to 14 months, it's rallied, 8 or 9%. And over that time period, the equity market rallied. It gave a lot up in the Q4, but then it's come roaring back this year as the dollar's gotten stronger in the first part of the year. And so I still think that's the case. I think largely as the dollar goes, so go the rest of the market. I think it's going to be really interesting for the next 3 to 6 months on whether the dollar backs off and needs to take more time to build up enough momentum to finally break through that 98 level, or if it's able to break through the 98 level in the next month, because once I think that 98 level gives way, that's when things are really going to get started. My belief is that as the dollar gets stronger, it's going to put pressure on the rest of the world. Now, as the dollar has not broken out yet, it's to a certain extent has allowed the rest of the world to take a deep breath, so to speak. The rest of the world owes a lot in U.S. dollars. Now, the U.S. owes a lot in dollars as well. That cannot be denied. The difference is that the dollar is our currency, and we naturally have access to it. The rest of the world does not naturally have access to our currency, and the rest of the world owes $11 trillion in dollars, and a lot of that is coming due over the next couple of years. So as the dollar has maintained its level rather than breaking out, it's allowed these other countries to kind of continue operating at rather slim margins. That's not allowing them to, have any breakaway growth, but it hasn't really put them to the mattresses yet either. And so I feel like the whole world is like just taking a deep breath right now and gearing up for the fight to come, because I do believe it's going to be a fight.
And we're recording this interview on Thursday, June 13th. And let me add to your points. You talked about dollar-denominated debt. Well, just in the next, 12 months, China owes around $1.4 trillion in dollar-denominated debt. It's a massive amount of money that their state-owned enterprises owe and Chinese corporations owe in dollar-denominated debt. And it's so much money that it's a large chunk of their total reserves.
Yeah, and so this is the key point right here, is that for the last couple years, the U.S. dollar has not been increasing in supply. So we've been raising interest rates and doing quantitative tightening rather than lowering interest rates and doing quantitative easing, and that has capped the supply of dollars. But because of the U.S. dollar is still the world reserve currency, because trade still predominantly takes place in U.S. dollars, and because of this $11 trillion of debt, a lot of which is from China, as you just laid out, everybody is fighting for that limited supply of dollars. And it's worse than that, because a lot of this debt that's out there comes due in the next 2 to 3 years. You just mentioned the U.S. dollar debt that's coming due in China. There's $200 to $300 billion of emerging market debt, outside of the U.S. that's coming due in the next 2 to 3 years. There's a large portion of the U.S. corporate debt is coming due in the next 2 to 3 years. Meanwhile, the U.S. government needs to fund themselves, so they are going to be issuing debt that they need to access those dollars. And so my whole thesis kind of comes down to supply and demand. And my point is that demand is increasing for dollars. Demand for dollars is not falling. You may hate the dollar. The rest of the world may hate the dollar. The rest of the world may want to ditch the dollar and go to something else. But they can't until they have another alternative. And listen, there's no doubt they're working on alternatives. But if there was already an alternative ready to go, that card would have already been played. So the fact that there's all this demand and there's limited supply, that's a pretty good formula for price to rise. And, I would argue that the first people that are going to get those dollars is the U.S. government. The second people that are going to get those dollars are U.S. entities. The third and fourth and fifth people that are going to get in line for those dollars are the overseas entities. And when they have trouble getting those dollars as the price of dollars rise, it's going to put enormous pressure on their economies. That's going to cause the whole chaos that we talk about. Chaos is a ladder. I think it's going to be a progression. It's going to be a chain reaction. Chaos is going to start in one place, and it's going to bounce over to someplace else, and it's going to bounce over to someplace else. And I think it's all keyed on the supply of dollars. Now, a lot of people have said, but the Fed has already done a U-turn. They've completely changed their tune. They're no longer doing QT. They're no longer raising rates. In fact, they're going to cut rates. There's like a 99% probability priced in that they're going to cut by the end of the year, and many people are pricing in 2 to 3 cuts in the next year. And maybe they will, but the dollar has really not backed off. In other words, other than cutting, they could not have been more dovish. The Fed has not been more dovish than they could have been without actually cutting rates, and the dollar is right at its highs. And so when this dollar demand, really, really kicks into gear, when everybody's fighting for those dollars, even if the Fed, stays on this easy path that they've been over on the last, call it 6 months, and even if they accelerate the ease and cut rates, what's the rest of the world going to do? Is Europe going to just sit back when we cut rates and not do the same? I mean, over the weekend, they floated the idea that they're open to a rate cut. Does anybody in the world think that Japan is going to sit by while we cut rates and not do the same? Of course they're going to. China has flooded their market with liquidity in the first 5.5 months of 2019. Does anybody think that they're going to just sit there and turn the screws back on and tighten credit when we're easing? To me, it's silly. So even if the Fed comes out and cuts rates or talks easy and guides towards more rate cuts, maybe the dollar backs off for 2 or 3 months. But in 2 or 3 months, we're going to be right back where we started because everybody else is going to cut as well. And I just think that this all turns into a big, big dollar mess. And I think that has enormous implications for credit markets. It has enormous implications for currency markets. It has enormous implications for equity markets. And like I said, I think we're really in the calm before the storm right now.
And I don't think any you mentioned all these examples of the government, what they're doing with their monetary policy. I don't think any government is doing a good job right now. And if so many of these countries hate the dollar, then why did their politicians and their bankers borrow so much dollar-denominated debt? There's like about 10 trillion approximately dollars outstanding from emerging market dollar-denominated debt. So if they hated the dollar so much, why were their politicians, why were their corporations, why were their bankers so short-sighted to gamble and borrow in dollar-denominated debt if they hate the dollar? It just...
I think they tried to do it like a nice little trick, right? They tried to borrow in a currency that they thought was going to fall, and it didn't. And now they've got to pay it back, and they can't afford to do it. Leverage kills, and it doesn't matter, what industry you're in. It doesn't matter how smart you are or how stupid you are or all the prospects that you think you have. When you have a lot of debt, it limits your choices because the first people that have to get paid is the bank. Because if you don't pay your banker, they come in and they take your collateral or they, impair
economic hitmen.
Yeah.
Potential regime change too, or IMF loans. They start stripping the assets of the country if it's a small country. Yeah.
Sure. That's a good thing to point out. And listen, I think this is something that a lot of people don't consider, and I think when they get into this situation, they consider what should be done rather than what will be done. And what I mean by that is, let's go back to the whole de-dollarization idea that, the rest of the world is tired of using the dollar and that they do not want to be under the thumb of the U.S. anymore. And the U.S. is this big imperial bully who's been bossing us around for years and we're just not going to take it anymore. Okay, let's pretend that that's the case. Well, and let's take the next step. Let's say that they decide that they want to leave the dollar. Okay. So now they all got to get together, and they've got to get all these different countries to agree that they're going to leave the dollar. Then they've got to agree which other currency they're going to use. Then they've got to agree who's going to enforce that new currency. Then they've got to agree who's going to build the system for that new currency. And once they've done that, they have to deal with the wrath of the United States. Now, if you want to label the U.S. as a dictatorial empire, I'm not going to argue with you too much on that. One thing I would say is that we, to a certain extent, have been, if we've been a dictatorship or if we've been a bully, we've been somewhat of a benevolent bully. In other words, we've told everybody, this is what we're going to do, you need to follow along or else. But we've pretty much given them the chance to just follow along. If the rest of the world were now to, come at us and say, no, we're not going to do that anymore. We are going away from you. Do you really think that we're just going to roll over and say, okay? I mean, we have the world's biggest market. We are the number one or number two client for almost everybody else in the world. If we're not the biggest, then China is, but then we're number two. If we cut off the rest of the world from our markets, what do you think happens to their companies? Now, they'll say, oh, well, we'll trade with Europe or we'll trade in turn. Well, yeah, but you've just lost the U.S. market. I mean, does anybody think that Trump is going to just sit back and, let it happen if the rest of the world tries to go away from the dollar? Then we've got the world's biggest military, which we have used to enforce the dollar's use for the last, let's just call it 80 years for lack of a better number. Does anybody in their right mind think that now, after doing this for 80 years, that we're just all of a sudden not going to use our military anymore? Now, again, I'm not saying that this should be done. I'm not saying it's the moral thing to be done. I'm not saying that it's justified. I'm just saying that it is. If you want to talk about real politics, that's real. The military-industrial complex of the United States is real. The Pentagon is real. The 180 military bases we have around the world is real.
And very powerful.
And, very powerful, right? And empires do not cede control willingly. They don't. So if you believe we're an empire, you've got to believe we're going to fight with everything we have. And to be honest, I don't even think that fight has really started yet, let alone ready to be at the end.
And to add to your point there, for people, I've lived in the D.C. metro area now for almost 20 years. If you're not familiar with this area, if you've lived here for a while, you will realize that the majority of companies and people that are hired here are connected to the military-industrial complex. So this area is deeply rooted, whether you're Republican or Democrat, in servicing either private sector companies or defense contractors or think tanks for military-industrial complex companies. A lot of it is centered around the Pentagon and the military-industrial complex. So I think the average American listening to this podcast who has not visited or lived in the D.C. metro area or visited that long does not understand how much power the military-industrial complex has and how much influence they have over both political parties and also the bureaucracy.
No, absolutely. And like I said, it's a real thing. It's a real power. The rest of the world leaving the dollar-based system, it's basically, a whole new world order, if you will. And that doesn't happen without a lot of chaos. And it doesn't happen, without a fight. And like I said, I just don't think the fight has even really started yet. A lot of people think we're at the end game of the U.S. empire. And I'm not saying that we're not moving in that direction. But I'm just saying we have not had the final battle yet. And I think when we do have that final battle, initially the dollar is going to get much stronger before it goes away.
Now, if the dollar gets much stronger, are you looking at, bankruptcies, failures, massive amounts of them, or is the Federal Reserve going to do what it's been doing, similar to the playbook that it's been doing the last 10 years, and just step in and extend currency swap lines to the European Central Bank and, do things like that? Do you expect that to continue, or do you expect a different type of strategy then?
Well, to be honest, I think it'll be a little – I'm not going to say that they won't do it because, I don't put anything past central bankers. I mean, they will, if they need to provide liquidity, they'll provide liquidity. But we do have a different environment now in that we have a president who's not afraid to openly and publicly take on the Federal Reserve. So let me just give you a scenario. Let's pretend that, we get into this place where the dollar's going higher. And let's say the DXY breaks through 98 or even the trade-weighted dollar, breaks through 130, and now we're moving on to all-time highs. And it starts to put pressure on other countries. And let's just say that, China needs access to dollars. And let's say that Mexico needs access to dollars. And let's say that, Turkey needs access to dollars. And Poland needs access to dollars, et cetera, et cetera. Okay, so now the Fed comes out and says, okay, we are going to provide some liquidity relief. The market needs dollars. Well, let's figure out who is in line to get those dollars. The first people that's in line to get those dollars is the U.S. government itself, because it needs dollars. Okay, so it takes the first amount of dollars. Then who's going to be next in line? Well, do you think that Trump is going to stand by and let Mexico or China or Turkey go before the U.S. corporate needs? No. So the U.S. entities are going to be next in line to get the dollars. Okay, so then who's after that? Well, then maybe China gets in line, maybe Europe gets in line. Okay, so who comes after that? Well, then after that comes places like Argentina and Turkey and, some of the more emerging markets. And as they just can't get the dollars, because the dollars are starting to disappear, it starts causing chaos. Now, second of all, let's pretend that Trump says, wait a minute. You're telling me that the Federal Reserve is going to provide bailout swap lines to Turkey and India and Russia and China, but you're not willing to give me $5 billion to build the wall on our southern border? I mean, you don't think he's going to make that a campaign issue? And you don't think that people are going to support him? The people that voted for him the first time, do you think that they're going to support him when he says, listen, you go tell the Federal Reserve that they need to give the U.S. people resources before they give our resources to Turkey and these other places? I mean, it's a very populist rhetoric, but in my opinion, it will work. Now, again, I go back to, I'm not saying it should work. I'm not saying it's the right thing. I'm not saying it's the morals thing. I'm just saying that's real politics, right? That's big boy rules right there. That's just coming out and Trump using his bully pulpit to bully the Fed into doing what he wants to do. Now, I don't think the Fed is necessarily going to roll over to Trump either. I think they're fighting for their life as well. But my point is it's not as easy to just open the swap lines as it was before. The environment is not such as it was back in 2010 and 2011. I think a lot of things has changed, and I think it's kind of a whole new world, so to speak, and really nothing's off limits anymore. Forget about the whole, just the Fed thing. What about the MMT proponents who are saying, if the Fed's not going to do what we need to do, then we'll just do it from a government level. We'll literally print the dollars. Or we'll literally, do interest rate caps or whatever it is. And it's not just in the U.S. People will say, oh, MMT is coming. It's going to be the death of the dollar. Well, if we do, you don't think Europe's going to do it? You don't think Japan's going to do it? You don't think China's going to do it? So it really is a relative world. It's not going to be a case where the U.S. somehow prints to oblivion and everybody else goes to strong money policies. It doesn't work that way.
So I want to get your views on China then. There's been in the last 3 weeks or so very interesting stories come out that normally in the past we never would have found out about. There was the Baoshan Bank failure. I believe Chinese creditors are now only getting about 70 cents on the dollar approximately. So if you had money at Baoshan Bank or you're a creditor of the bank, I think you're getting a 30% haircut. And the Chinese announced that that's going to be kind of the playbook for all future bank failures. So do you think then that China is really looking like a major crisis in the near future?
Yeah, I've said this before, and again, this isn't me like pounding on China. If I look at the world, I think China's in trouble. I just really do. I think that they've had an incredible amount of growth over the last, 30 years. People call it this economic miracle, but the reality is it's not a miracle. It's a very commonly used trick, and the trick is you borrow a lot of money and you spend it into the economy, and the economy grows. The problem is with that trick is you eventually need to pay it back, and China's gotten to the point where they need to start paying it back. And as a result, the extension of credit is further credit is tough. The growth isn't there to support the money that's already been borrowed, and you're starting to see bank failures. China needs dollars to operate still. They're trying to internationalize the RMB. They're doing a lot of things to try to open up their markets, but it's not ready. And, the fact that, they've had to start bailing out some of their banks, maybe they're small banks, maybe it's not the big banks, and maybe, it's just a small little skirmish on the side of the bigger war, but it's indicative, right? I think China has real problems because their growth is probably slower than what they're saying, and you're starting to have some issues that can backfire against them politically. You're starting to see protests in Hong Kong against this new extradition bill that Hong Kong is considering implementing. And I think the big thing for China that I'm not going to say people haven't noticed it because people are starting to notice it, but the big issue for China, I think, is feeding its people. And it's becoming a bigger issue, and I think it's more important than people are realizing. They're the biggest importer and producer of pork in the world, but they have the Asian swine flu, which is decimating their pork supply. And so, one of their biggest sources of protein is basically being taken off the market. And with the tariffs that are now in place, they're having more trouble importing pork from overseas. So that's one thing. And not only that, but the pork prices are higher. Okay, so that's one thing. The second thing is that they've started to have issues with armyworm, which is a way to say that it's attacking their crops kind of in southern China that can lead to crop failure. And so their grain market is coming under attack. And so they're going to have to import more grain than they otherwise would have to. Then a couple of weeks ago, it came out that there was an outbreak of bird flu, and that's starting to metastasize in their poultry markets. So now you've got two of the, so not only is their main source of protein under attack, but their second biggest source of protein is now under attack, and their grain market is having troubles. Then, okay, so that means they have to import more. Well, there's tariffs, but then the other thing is that the U.S. market, if you look in the U.S., we've had a number of spring storms that has dramatically curtailed the ability of Midwestern farmers to plant fields in their crops. So the planting of crops in U.S. agricultural markets is way behind schedule. So the point I'm making is, 6 to 9 to 12 months down the road, I can see potential for a food shock, especially in China. And, people will put up with a lot of things, but when they get hungry, they start to get restless. And, when they're hungry and mad and not making money, that's when they start protesting, whether it's deserved or not. When I'm hungry and mad, I tend to act irrationally. So, it's the same thing in China. So and if that happens at the same time that their credit markets are seizing up, they've got a real problem. And I'm not sure what their solution is going to be or if they're going to have a solution. But my point is that I think China, even if they are able to weather it and, eventually, 5, 10, 15 years from now are on the rise again, it's going to be a very rough road. This is not going to be a smooth ride for China. It's not going to be a smooth ride for anybody. But for those who think that China is an economic miracle who has a silver bullet to solve every crisis, I think they're going to be sadly mistaken.
And China has also had 8% increase in food prices in just the last 12 months, or almost 8%. It's like 7.7 or something like that.
Yep.
But it's an insane amount. And, the publicly China's talking about strength and how they're going to fight the U.S. in the trade war. Privately, from my sources in China, things are getting much, much worse with their economy, with their factory owners.
Yeah. At the end of a lot of people argue with me on this, and listen, you can go back and forth, around and around, but I am of the belief that in a protracted trade war, it certainly hurts the U.S., but I think it hurts China more. I think that they need us more than we need them. And that's not to say that we're self-sufficient and we don't need the rest of the world. We do. But if you really get down to brass tacks, I think they need us more than we need them. And I think that as this goes on, which, I think it's going to be like a roller coaster. There's going to be weeks at a time where, we're working in the right direction and markets will rally, and then, they're not going to come to a deal and it's going to go the other way. And, I think the longer it goes on, the more it hurts China.
And that's the reason why roller coasters are not long rides, because people can get sick on them, right, going up and down.
Exactly. It only takes so long. That's exactly right.
The other thing that worries me about China, besides how quickly they've grown this credit bubble of almost $50 trillion, is that they need dollars to import food and energy, which is why they're working on workarounds for that, to import food and energy without using dollars.
Right. And, I hear this a lot, and there's people that have made arguments that, that they will start because they're the biggest customer, they can demand that they will buy these commodities in yuan rather than dollars. And listen, I'm not arguing that those, attempts aren't being made. Of course they are. Of course China is trying to import using yuan, but the majority of it still is not by yuan. The majority of the market is still in dollars. And, as much as they may want and as much as they may ask and as much as they may, play hardball, the world still operates on dollars. And it does not operate on yuan. And no big trading partner wants a lot of yuan as a means of payment.
And to wrap things up here, Brent, this is why I think the trade-weighted U.S. dollar index or the broad index is at 129.208 and near all-time highs. So the dollar index has been weak lately. It's failed to get above 98, but that's only against like G6 and G7 currencies, mostly the euro and the weighting. But the dollar against emerging market currencies is at or near all-time highs.
No, absolutely. That's a great point. I'm glad you brought that up. When I'm talking about the dollar, I often talk about the dollar index because it is against the major currencies. And I think that the dollar is going to do very well against the major currencies. But forget about the major currencies for a minute and just think about the global currency basket, right? You look at the chart of the trade-weighted dollar, and it's broken out. It broke out, it came back and retested support, and it's gone higher. That's about as nice a chart as you can see from a technical perspective. These smaller countries who have borrowed in dollars and now have to finance it in dollars, they are in a world of hurt. And listen, maybe there's a way that the powers of be can work together to relieve some of the pressure and get the dollar weaker over the next couple months and take off some of that pressure. But I just don't think it can last. And even if they are somehow able to manufacture some dollar weakness, I don't think it's very long before we're right back where we started. And when that chart really starts to rock and roll, you're going to see a whole lot of pain.
I think it's probably more than messing with the exchange rate like crazy. I think it's more likely we see either extensions of liquidity programs or new liquidity programs. I know China has a new liquidity program that they announced for their banks for emergency liquidity. But, the U.S. has been doing these liquidity programs with the European Union, European Central Bank. I would maybe expect some type of an announcement then in public about the emerging markets in the near future if things truly get dire.
Sure. And I'm gonna make one last point before we have to go, because I think this is very important for people to understand. A lot of times you will hear about all the debt that the United States has, $21 trillion in debt. And listen, I have made that point myself, that this is unsustainable. This is going to end in tears. It's horrible for the long term. And that is absolutely the case. However, in the short term, right now, we have bumped up against the debt ceiling, which means for the last couple months, we have not been issuing new bonds. And because the debt ceiling issue is not coming to a head for another couple months, it means that the way that the government has been funding themselves for the last couple months and for the next couple months is to take the cash that they have in the bank and spend it. And so they're drawing down their cash balance, and they're putting that money out into the market. That provides liquidity to the market. That's almost like a stimulus into the market. The reason it's like a stimulus into the market is because we have bumped up against the debt ceiling. We're not issuing new bonds. Typically, you have the government spending money into the economy, but also taking it back in by issuing bonds. When they issue bonds, they're basically buying dollars with bonds. So you have the biggest buyer in the world is out of the market right now. But in September, October, it's going to hit a head as far as the debt ceiling. It's going to come to a head. And as much as they whine, as much as they protest, as much as they say this is not sustainable, the Congress will raise the debt ceiling. And when they raise the debt ceiling, the dollar is going to fly, because the biggest buyer in the world is going to be coming back in there, and they're going to be crowding everybody else out, because they are going to be the first person in the line to get that supply of dollars. I think if you look at the chart, there's a chart that I put out that shows the cash balance at the Fed, the debt, the growth of U.S. debt, and the dollar index. And what it shows is that when you hit up against the debt ceiling and we're not issuing new bonds, and the Treasury is spending the cash that they have into the market, it shows that the dollar gets weaker. And as soon as they start issuing bonds again, the dollar turns and goes higher. And the fact that we're sitting right at the highs and we're not issuing new bonds is not a good scenario for dollar bears. When that gets lifted and the government comes back in and crowds everybody else out for those dollars, it's going to push the dollar higher, I believe. So I think that's something to be looking at very closely.
We live in times now where things are often counterintuitive to how we think they are. So I know, Brent, that the gold community doesn't necessarily like you and me as much as they used to. I know people that are bullish China don't necessarily like you and me as much as they used to, because the sentiment out there was that China was going to crash the dollar and the gold price was going to go crazy, the dollar potentially was going to collapse, or China was going to buy all this gold and then the dollar was going to collapse. But it looks like you're going to be right, that because there's just so much dollar-denominated debt, and in the short term, that scenario might not play out how the gold community and the alternative media are expecting.
Yeah, and first of all, I'll tell you, I have a lot of friends in the gold world. I love those guys. I think they're amongst the smartest and most well-intentioned and hardest-working people that I've ever met, and I think they have the long-term picture largely correct. I just think in the short term, things might go a little bit differently than they think it will. I'm still friends with them. I'm happy to have a beer with them and talk and debate with them and laugh and stuff. Maybe they don't like my views on the dollar, but it's nothing personal. I just think this is how it's going to play out. I think everybody should own gold as insurance. I just don't think it's going to pay off right away. And we didn't really have time to get into it, but one of the things is the gold is at a very interesting point right now. It's trying to break out again. And if it breaks out and can maintain its level above 1,300 for the next couple of years, I think the mining companies will be okay. But here's the problem, is the mining companies have also levered up on debt. Talk about people that are owing dollars. There's few industries that owe more dollars as a percent of their capital structure than the mining industry. That includes gold companies. If the gold does not break out here and it bumps around between 1,100 and 1,300 for another 2 or 3 years, while they're having to refinance, they're in big trouble. 10 years ago, the debt to equity ratio of the capital structure of mining companies was about 1-to-1, so about 50-50. That's completely changed in the last 10 years. Now it's like 10% equity, 90% debt, and they've got to roll all of that in the next couple of years. It's a big problem if the price of gold does not go higher.
I totally agree, and it looks like, unfortunately, that Hecla Mining may be the first victim as they just breached their debt covenants. Just breached. So we'll have to have you back on again in the next couple months for an update to talk about these other topics. Due to time constraints, we couldn't cover everything. But I want to thank you very much for your time today, Brent. And if our listeners want to follow your work, how do they do so?
Yeah, thanks for having me on. I'm always happy to come back. Best way to reach me is just Brent, B-R-E-N-T, at SantiagoCapital.com. I'm very active on Twitter. You can just search either Brent Johnson or Santiago Capital on Twitter. My Twitter handle is Santiago_AU Fund. Anyway, always happy to talk to you, Jason. Look forward to catching up with you later this summer.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to wallstreetformainstreet.com, that's wallstreetformainst.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.